Hey, what's going on, guys? It's Johnny. Today we're going to be talking about how to start investing in the stock market. Stock market for beginners. I'm assuming here that you're a complete beginner, so we're going to go through the basics on how you can start investing in the stock market, okay? So first of all, let us determine what is a stock, right? So if you don't know, a stock is partial ownership of a company. That's all there is to it. So when you buy a stock, you're actually part owner, a very, very small part owner of the company. You can vote and everything. They send you the voting and everything electronically, so you can actually make decisions on a couple of things within the company. So you're actually part owner of the company. Okay, so it's very important to keep that in mind, especially during the when investors are kind of in a frenzy and they're just picking symbols on a screen. They don't even understand what they're picking, and they don't even understand why they're picking it. They just get in this frenzy. That's kind of what we don't want to do. But first, let's keep on going here. So now that we understand basically what a stock is, let's talk about how you can buy stocks. Okay, so imagine there's a place called the stock market. Yeah, there's actually a place where you can go buy stocks, but you can't go directly to the stock market, right? You got to go through brokerages. Think of the brokerages as like, grocery stores, right? So there's all different kind of grocery stores. You got the Albertsons, you got the Tom Thumb, you got the Kroger, whatever. It's the same thing with brokerages, right? You got TD Ameritrade, you got Robinhood, you got E-Trade, you got all those guys, right? So you can pick which brokerages you want to go to, which brokerage you want to use to be able to buy the stock. Okay, so that you buy the stocks through the brokerages. A couple I recommend, I use personally myself, is Fidelity. It's just fidelity.com. It's great brokerage. I use it for stocks, and actually I have a cash management account there as well. I would suggest that. Also, if you're new too, I mean, Fidelity has all the stuff, and it's not hard to maneuver. But if you're new too, probably I could even recommend the Robinhood app. So it's a very simple app to use. I'll leave a link in the description below. If you use my link, you get a share, I get a share. It all works out. So make sure you do that. It's very simple to download, and you can start funding it and picking stocks immediately. It's not that hard. I won't show you the clicks and stuff to go through it or anything, but just follow the link and follow the steps. And I also will link below or somewhere up here the video I did for the top 3 pros and cons of the Robinhood app. Okay, so it gives an in-depth perspective of me from a few months of use and what I see is good, that are good and bad points for using the Robinhood app. So make sure you check that out. So back to the stock market. So we know what a stock is. We know how to buy the stock. Now, why do we buy the stock? To make money, right? So let's talk about a few ways on how to make money in the stock market. Obviously, this is the real reason why you're here. You want to make some money, right? But there's different ways to make money. So depending on what your financial goals are. I'm not an advisor, okay? Financial advisor, lawyer, attorney, any of that stuff. I'm just some dude on the internet, so this is not financial advice. Take this as just for educational and entertainment purposes, okay? So, but anyway, disclaimer over. So how you make money in stocks, there's a couple of different kind of ways. Number one, appreciation. Okay, so let's say that, for example, you hear the whole thing, buy low and sell high. So let's say that, hey, you bought Apple stock today at, whatever it is, $200 for a share, and then next year it's worth, $300 a share. You make $100 off that per share. Or it could end up $100 a share next year, and you lose $100. But let's talk about making. So buy low, sell high. You pretty much, you buy it lower than you sell it. So that's appreciation. Okay, it's the difference of the amount of the bought value minus the current value. Okay, so Of course, there's unrealized appreciation, which means if you haven't sold it yet, what's it worth if you did sell it? And then realized appreciation means you sold it, how much money did you make or lose? So realized means after it's sold, that's all it means. And unrealized means if you still own the stock, what's it worth now compared to what you bought it? Okay, so another way to make money, okay, besides appreciation, is dividends. Now, this is the thing where everyone's talking about, you know, making money doing nothing. It's just passive income, right? They pay you. Okay, for example, the dividend, right? In this particular case, Iron Mountain, which is a real estate investment trust, REIT, it pays an annual dividend of $2.47 a share for every share that you have. And the yield after that comes to 5.71%. So every year they pay you 5% just for owning the partial ownership in the company. Here's 5.78% here. Have a nice day. Depends on the stock price, right? If the stock price goes down, the dividend yield is higher. If it's up, the dividend yield is lower. But either it's still that 272 or whatever it was per share. So that's wonderful income, and it's tax less usually than if you buy a stock and then you sell it. Okay, so that's called dividend income. So but you know, check all that stuff out with your tax advisor or whatever. Another way to make money is option trading. Now, option trading is puts and calls, but let's talk about that later. Let's just, in your mind, you just know that options exist, but it's more of an advanced topic. But let's go through the basics here. Okay, this is the basics. So dividends, appreciation, options. So let's say, okay, I'm ready. You know, you downloaded the app, you put some money in the account, and you're ready to buy stocks. Now you're like, well, what stock do I buy? Right? So you can do. There's many ways. Let's go back to our example here. So there's many ways of evaluating a company. A big way that people use is the price to earning ratio, which means how much does this stock cost based on the earnings from the past 12 months. TTM means trailing 12 months. So in the past 12 months, how much is this? What's the price divided by the earnings for the past 12 months? Okay, so that's a common way. There's lots of ways, price to sales, price to book, all kinds of ways, but the PE is one of the most commonly used ones that most people will understand when you're talking to them about it. So, but like I said, there's all kinds of stuff, and there's even, you know, there's no reason why people buy stocks because everybody else buys them, right? So, you know, but you got to have a reason and understand the value of the stock, because if it goes down to 10% and you freak out just like everybody else and you sell it too soon, you're going to lose money, right? But if you know, oh no, this is a fairly valued stock and people are just freaking out, if it goes down 10%, you say, oh, I'm buying some more, right? And that's how you become successful, you know, so they say, you know. So that's one way to evaluate, and let's talk about the types of stocks you want to buy. Now, okay, you're like thinking, hey man, this is getting kind of complicated, right? Evaluation of stocks. I mean, I don't really want to do all that. You can if you want to, and if you're the type of person that likes to study and figure things out and understand and you know, do that kind of thing and dig deep into the details, then you can, you know, I would suggest you look into individual stocks, like for example, our example, Iron Mountain, to me has been a really good stock. But another way of doing it, if you're like, man, I don't want to do any of that, I just tell me what to pick, and let me put my money there and make a safe return, and you know, just leave me alone. I don't even want to think about it. I just want to every paycheck throw down some money. And have somewhat of confidence to know that, you know, 10 or 20 years later when I need the money, it's going to be there, right? That kind of thing. So that type of investing, that type of thing is known as an index fund. So, for example, here's a pick I'll give to you, which is I believe a very safe pick. Anytime just keep putting money in, is the S&P 500. Okay, so ticker symbol. What is a ticker symbol? Ticker symbol means what is the identifier of that particular stock or index. Okay, so, and by the way, an index just means like a basket of stocks. Okay, so ticker symbol VOO, Victor, Oscar, is the S&P 500. Okay, you get little slivers of the top 500 companies of America. Thank you very much, right? I mean, if you believe in the strength of America and that we ain't going nowhere for a while, that, and I put my money in that, I would wholeheartedly suggest. And sometimes it goes down. You'll hear about the stock market crash and stuff like that, but eventually we come back, right? So one of the picks I would suggest for you is VOO. You might have heard of SPY, which is pretty much the same thing, except SPY has higher fees, 3 times higher fees. So VOO would be good, and it contains. Let me show you. It's the Vanguard 500 Index Fund. So VOO, I'll tell you what kind of quality companies you're getting here, right? And it's got a 1.3 passive income, 1.34% distribution yield. Okay, so it's not too terribly bad. I mean, you get something as well as you're hoping for appreciation. But anyways, what does VOO have? VOO has great companies like Apple, 5.92%, Microsoft, 5.6%, Amazon, 4%, Facebook, Google, Berkshire Hathaway, Tesla, Nvidia, JP Morgan, as well as about 500 other fantastic American companies. Okay, so, and the good thing about, one of the good things about Robinhood is you can buy fractional shares. So don't freak out about, I have to buy $396. I don't have $396. It's cool. It's cool. You don't have to. So with the Fidelity or Robinhood, Robinhood is so easy too. So you can buy $5 worth, $1 worth, $10 worth, and you still own fractional shares of that company. How awesome is that? Of those 500 companies. Whew. Anyways, I get excited about that kind of stuff, y'all. So do some research. I'll give some other picks too if you want to invest in world or emerging markets. I do all that kind of stuff. So make sure you subscribe to the channel to get future conversations, future videos about this. So leave a comment below what stock you want me to research or what index fund you believe is the best index fund for you. And tell me why, and I'll take a look at it. I'll leave some links to some books, some actual books that you can buy from Amazon, which myself, I'm usually a value investor with a little bit, like 5 or 10% of aggressive stocks within my portfolio. So mostly value, but a little bit aggressive. But I'll leave some links to some books in the description below as well, or up here somewhere. Please give me a like. Helps the algorithm out, helps some people out who need to learn about the stock market. Of course, there are risks and all that stuff. I don't guarantee any returns or any kind of weird stuff like that. But and if you ever find someone who does guarantee returns, I'll run. But anyways, subscribe, comment, like, do all the things you do. Thank you so much for watching. Really appreciate it. And keep hustling. Peace out.